Hello friends, we will continue with our discussion on retirement of a partner, right? So in this lecture we'll be starting with a new topic. So far we were discussing about retirement. In this lecture we'll be starting with death of a partner, right? Death of a partner. Now, the death of a partner is almost equivalent to retirement of a partner. Say there are three partners in a partnership firm. One of the partner is retiring from the partnership firm to our left, or one of the partner dies, then also to our left. So death of a partner is almost equivalent to retirement of a partner. So from that point of view, accounting treatment is similar to as done in retirement. Similar to retirement, right? That means the adjustments regarding goodwill, regarding revaluation, regarding reserves, everything will be done as is done in case of retirement of a partner. Calculation of new profit sharing ratio, calculation of the gaining ratio, right? Then in case of death of a partner also, we will also calculate the amount that is due to the partner who dies. Amount due to the partner who has died, right? So we have to calculate the amount due to the partner who has died. This is exactly same as we have done in case of the calculation of amount that is payable to the retiring partner. Here in case, now remember, in case of retirement of a partner, first of all we calculate the amount that is payable to the retiring partner. How we calculate that? We prepare the partner's capital account, and whatever is the balance of partner's capital account, we transfer to the retiring partner's loan account, or either we pay him off, right? So the balance of capital account reflects the amount that is payable to the retiring partner. In this case also we will prepare the partner's capital accounts. In this case also we will prepare partner capital accounts, right? Then we will find out balance in deceased partner, means the partner who has died, right? Deceased partner's capital account after all adjustments. All adjustment means regarding revaluation, goodwill, reserves. After doing all the adjustments, we will find out the balance in the deceased partner's capital account, right? Now, in case of retirement, if you remember, this balance is transferred to the retiring partner's loan account, isn't it? This balance is transferred to the retiring partner's loan account. Now, in case of death of a partner, the partner is no more. How can you transfer that money to his loan account? But you have to pay this money to someone. The continuing partners, the remaining partners, they have to pay this amount to someone. But here we don't have a partner. He has died. So to whom this money is payable, this balance, this amount payable will be transferred to deceased partners, that is the partner who has died, deceased partner's executor account. This is executor means the legal heir of the deceased partner, right? For example, it can be wife, it can be son, it can be daughter of the deceased partner, right? So whatever the balance, whatever is the amount that is payable after the death, that amount will be transferred to the deceased partner's executor account. Clear, friends? So one thing is clear, in case of death of a partner, the accounting treatment is absolutely similar to what we have done in retirement. You have to do the revaluation as you have done in retirement, because death is equivalent to retirement, right? So you will calculate, you will do all the adjustments as you are doing in retirement. You will prepare the partner's capital accounts and find out the balance in the deceased partner's capital account after all adjustments. This balance shows the amount that is payable to the deceased partner. But now the partner is no more. This amount will be transferred to deceased partner's executor account, right? And if this amount is not payable, or if this amount is payable in installments, it will carry an interest as in case of retirement, right? We'll say this amount if to be paid in installments, will carry interest, right? Clear, friends? Now, if it is to be paid in installments, if you remember, in case of retirement, we prepare partner's loan account. In this case, because the amount is transferred to loan account, now in this case, we will prepare executor account. Clear? This executor account is absolutely similar to retiring partner's loan account. Clear? So it is just the names that have changed. There, in case of retirement, we transfer the amount payable to the retiring partner's loan account, but in this case, we transfer the amount to the deceased partner's executor account, right? In case of retirement, we prepare the retiring partner's loan account, and in case of death of a partner, we will prepare executor account. Rest everything will be absolutely same. The method of preparing the account will be absolutely same, right? It is just the names that have changed. Clear, friends? Now, if we talk of death, in 99% cases, death will happen during the accounting period. Death can happen anytime. As in case of retirement, retirement is voluntary retirement, right? It is done either at the end of the year, either in the beginning of the year, or in between the year. As we discussed in the last lecture, in case the retirement is done during the accounting period. But death is not voluntary, friends. It can happen anytime during the year, right? So you can say death can be anytime during the accounting year. That means this case becomes equivalent to, this is equivalent to retirement during the accounting year. Clear? This is absolutely similar concept. Death during the accounting year, or we can say retirement during the accounting year. But there is one method that is added. There are two ways of calculating it. One is on time basis. On time basis, if we talk of time basis, then it is absolutely same to what we have done in retirement during the accounting year. That is, we will be given the average profits of the last few years, right? We will be given the profits of the last few years. We'll calculate the average profits, and we will assume that those average profits we will earn this year also. And on the basis of that, we will calculate for the period till the death of the partner, right? Then the deceased partner's share we can calculate. And similarly, the two cases we discussed in the last lecture. Case 1, if the new profit sharing ratio of the continuing partners is same as the old profit sharing ratio, then the journal entry will be profit and loss suspense account to the retiring partner. Here we will say profit and loss suspense account to deceased partner's capital account, right? But if the new profit sharing ratio is different for the continuing partners, then the journal entry will be continuing partners continuing partners account debit to the deceased partner's capital account, right? For this, please friends refer to the previous lecture, right? If we have done the previous lecture, this time basis is absolutely same what we have done in case of retirement during the accounting year. The second one is, that is the new addition. Second one is sales basis. Right? Now, what is this? Let's see with an example. There are three partners, A, B and C. They are sharing profits in the ratio of 2:2:1. Right? Year ended on 31st of March 2015. Clear? Now what happened is, B died on 30th of June 2015. Their accounting year ended on 31st of March 2015, and after the 3 months from the beginning of the new accounting period, that is 1/4/15, after 3 months B died. So one of the partners died. Simple information. Now what we are given next is, he says sales for year ending 31st March, that is for the previous accounting period, the sales were 3 lakhs. Right? Next they say the profits for the year ending 31st March 15 are 30,000. Now, can you tell me the rate of profits on sale? rate of profit. We can calculate how? Profits divided by sales multiplied by 100. That is, at what rate we have earned the profits on sales. At what rate we have earned profits on sales. Right? This is a simple mathematics. Divided by 3 lakh into 100. This comes to how much? 10%. That means we have earned profit at the rate of 10% last year. Right? Now we assume we are given the sales for 3 months. Which 3 months? April to June, because he died on 30th of June. We are given the sales for 3 months. This is 1 lakh, he says. Now what we are going to do is, we have the sales for the last period, we have profits for the last year. We calculated that last year we earned profits at the rate of 10%. Now what we are going to do is, we'll assume that we will earn profits at the rate of 10% this year also. Note, we will assume that this year also we will earn profits at same rate as in previous year. Clear? This is the basic assumption of this. He says we will assume that this year also we will earn profits at the same rate as in the previous year. That means this year also we'll be earning profits at the rate of 10%. Clear? So you can calculate profits for 3 months. We are given the sale for 3 months. What will be the profits for 3 months? Very simple. Sales into rate of profit. So profits for the 3 month will be 10,000. Now you have got the profits for 3 months. You can calculate, right? You can calculate the deceased partner's share. Deceased partner's share in profits. This comes to 10,000. And what is the share of deceased partner? What is the B's share? 2 by 5. This comes to rupees 4,000. Clear, friends? Again, now we have got the deceased partner's share. We have got 2 cases. Case 1, either profit and loss, suspense account debit to deceased partner's capital account, or this is the case where new profit sharing ratio is equal to old profit sharing ratio. If new profit sharing ratio is not equal to old profit sharing ratio, then the journal entry will be A's capital account debit, C's capital account debit to B's capital account, right, in gaining ratio. Clear, friends? So we have two methods of calculating the share in the profits, right? The first one is time basis. That is absolutely similar to what we have done in case of the retirement during the accounting year. The second one is sales basis. In this, we calculate the rate of profit at which we have earned, that is, we calculate the rate at which we have earned the profits in the previous year, and then we assume that this year also we will earn the profits at the same rate, right? So we can apply this rate of profit to the sales for 3 months that will be given, right? This way we can get the profits for 3 months, and then we can calculate the deceased partner's share in profit. Clear, friends? Right? So this is how you will be dealing with death of a partner. The accounting treatment is absolutely similar to what we have done in case of retirement of a partner, right? The only thing that is to be taken care of is the names that we have changed. In case of retirement of a partner, the amount payable is transferred to retiring partner's loan account. In case of death of a partner, the amount payable is transferred to deceased partner's executor account. In case of retirement of a partner, we prepare the partner's loan account, right? When the payment is made in installments, okay? And in this case, we will prepare the executor's account in the same manner as we prepare the loan account. We have just changed the names, nothing else. It is absolutely same, right? Then the death can be any time during the accounting year. This concept is equal to retirement during the accounting year. If it is on the time basis, then refer to the last lecture in which we have done the retirement during accounting year. And if it is on the sales basis, then you will have the sales for the last year. You will have profits for the last year, previous accounting period. You can calculate the rate at which the profits have been earned, and we assume that this year also we will earn the profits at the same rate, right? Then we have the sales for 3 months, so we applying the profit rate, right? We can calculate the profits for 3 months. Then we can calculate the deceased partner's share in profits, and then two cases are absolutely same. If the new profit sharing ratio is equal to old profit sharing ratio, then the journal entry will be profit and loss suspense account debit to deceased partner's capital account. And if the new profit sharing ratio is not equal to the old profit sharing ratio, then the journal entry will be continuing partners to deceased partner. They will share in the gaining ratio. Remember this profit and loss suspense account. Write this down. Make another note. Profit and loss suspense account will appear in the balance sheet, on the asset side. Clear? Profit and loss suspense account will appear in the balance sheet on the asset side. This is an important note, friends, right? So I hope you are clear with the concepts what we have done right now, death of a partner. So for any queries, you can always email me at ksjteaching@gmail.com. Right? For any queries, for any questions, right? You can always mail me. I will mail you the question set. I will mail you the notes. I can mail you the notes. I can mail you the class slides. No issues, right? You can always write me at ksjteaching@gmail.com. Right, friends? So in the next lecture, we are going to do one practical problem on this death of a partner, right? Practical problem on death of a partner, and we will wrap up this topic of retirement. So the next lecture is going to be the last lecture for retirement of a partner. Clear, friends? So in the next lecture we'll do one practical problem. That's all for this lecture, friends. Thank you so much.